I will join the committee in July. My first vote will be in August. Will be the August vote. I mean, the issue at the moment, actually in the UK, is not unusual here. Is what we are seeing is you've got falling headline inflation quite quickly. But if you look at what the composition of inflation and what's driving inflationary pressure, we are seeing more of inflation being driven by things that you might think could be persistent, so services prices, labour markets, those sorts of effects. Whereas the falls we've seen have been the changes to goods and energy prices that drove it on the way up. So on the one hand, you've got this question about how persistent is inflation going to be? What are these forces that are driving up? And you saw today with the labour market, right? So private sector wages at 6%. That's much higher than the bank's target. So you've got, on the one hand, you've got that question, and then on the other side, you've got, well, what we are also seeing is that activity is being impacted by monetary policy, and we are seeing some loosening in the labour market, for fewer vacancies, those sorts of issues. So the question really is, how do you balance those two risks, basically, and what is the future going forward for that? I'm not going to put a date on when I expect the UK to start the process of loosening monetary policy, but it clearly is the case that will be the direction of travel for certainly for European economies. That's what we would expect.